Hello everyone and welcome to TTT Markets. I am Fotis Papafeofanous, and in this video we are going to discuss why a level is not a trade and why context matters more. One of the most common mistakes I see traders making is confusing a price level with a trade. They mark a level on the chart and assume that when price gets there, they are supposed to act and take the trade. In this video, however, I want to show you, using nothing but price, why a level is simply a reference point, not a trading signal. This distinction becomes critical in prop trading, where overtrading and poor context lead directly to drawdown breaches. So let's get started with a very simple chart. You see here in TradingView, I have a daily chart of dollar-yen. We have a clear chart, and let's see now what happens when price is getting closer to a specific level at different times. So we have the trend line. So this is the long-term trend line. We see price hitting this level and it moves down. It is respecting the resistance here, the trend line resistance. However, look what happens at this time. We have the same trend line again. The price is approaching close to this level. It consolidates a little bit, moves a little bit lower, and this is exactly where most of the traders will get trapped. And what happens next? It breaks above the same trend line that acted as a strong resistance before and moves to new local highs. But you might say, well, this is not exactly the same level. It is one trend line, but the level is changing all the time as the trend line is moving lower. Okay, fair enough. You do have a valid point. So let's take a look at this level. I have highlighted here resistance. We have one resistance here, price comes down. The price goes again at the same exact point, comes down again for a second time. Same level again, the third time. And what happens? We have a strong trend to the upside. So can you see the same exact level that previously acted as strong resistance, not once but twice? This time, however, it doesn't matter. It doesn't matter at all. And the price keeps moving higher, and it even breaks above the key resistance trend line. Let me show you another example. This time, we will pay attention to this. Same level here, acted as support. Price stays there for a while, same level, and what happens next? It moves below. You might say, well, it didn't below a lot. Well, this is a daily interval, so let's see what happens and how it looks if I move to the 4-hour. So do you see that now that I move to the 4-hour time frame, that it looks very different? Again, the same level. You see that price stays here. This is where you enter because you think, price got to my level, I need to act right now. And simply, without any confirmation, without any process, without thinking about this logically and realistically, you just go ahead and buy. And then it moves below, takes out stops, and moves back up again. The same level that acted as support in the past. So what is the lesson here? What do you need to do? The number one thing is you need to understand the structure and the narrative. This is why I said at the beginning of the video that the level is not important. The level is there for a reference. You need to understand the structure of the market, what type of trading structure we have, and I will explain this further, and also context. Why did price stop here? What are expectations in the market? Are there any news coming out? Did we have significant news already hitting the markets? And I also discussed structure. What do I mean by structure? I need to explain this. What kind of market do we have? For example, right now you see here that we have a trending market to the downside that has momentum. What makes us believe that this is ending? What is going to give away that the structure is changing? You need to pay attention to these things and the speed of the approach. So here we have a strong trend to the downside. So that means that the sellers have the upper hand, and maybe some levels, some key levels could be taken out. We move forward and we see another period that price is moving horizontally. So we are moving from a structure that is moving vertically, and we have an initiative move to the downside. We have a couple of months that price is doing what? Is moving sideways. Sell the highs, buy lows, sell the highs, buy lows. And we keep doing this until it doesn't work anymore. This is why I explain and I say pay attention to the narrative and pay attention to the structure. This market was completely different this month. I think it was April towards May. This is entirely different market than the market after May till end of August. So from I think it is end of May until the end of August, we have a sideways market. The indicators and the approach you will use here, it will be completely different than the approach, the strategy you will use in this regime. You cannot use the same tools, the same type of strategy in these two different regimes. This is a trading market to the downside with whatever that means, and this is a sideways market that is working for 3 months. And look, as I said, let me hide this. You sell the highs close to resistance, you sell close to resistance, it works. You sell the resistance, it works. You sell, it works. Oops. And here it doesn't work. Here the structure changes. Why? Because for the first time after 3 months, price moved significantly above the previous highs. Previous resistance has been taken out. So this is something you need to think. So next time it moves here and you think that's it, it will move back down, well, let me zoom out so you can see. Look at this. What has changed? Can you see that now we have a different structure? If I zoom out, you think, well, what happened? Maybe it moves to the downside. You don't get the full picture. But if I zoom out and not zoom in, look what happens. Look what we have. We have higher highs and higher lows. So from a period of sideways movement, we start having a trend again. So can you see why the structure and the narrative is more important than the level? So for May and April, this did work. Yes, this level did act as resistance. But now as the narrative is changing, what happens? We have central bank decisions. We have expectations about interest rate action. You need to be aware of this. You need to be aware of what the narrative is. What is the expectation in the market? You need to understand structure. We are moving from sideways to trending. What about now? Let me give you a live example. Again, narrative, context. This is more important than the level. Level is useful for reference. And please do not think that I'm suggesting that you should not pay attention to the levels. No, on the contrary. But what I will do, I will also use context, the narrative that I'm talking about, and I will also try to understand what are the expectations and what does the narrative say, what does the context say, and what is the structure of the market. So we see here, again, if I zoom out just a little bit, this is the dollar yen, that since September, mid-September, end of September, whatever you like, the price moved significantly higher, at least at a local point here in dollar yen on the 4-hour. It moved up. We had higher highs, higher lows. This is until the 20th of November. And then why does it drop? And then for the first time we have a lower high. Again, expectations. We have central bank action, expectations regarding the Bank of Japan. We have expectations regarding interest rates coming out from the Fed regarding the United States. We had many economic indicators that were not so supportive about the US economy. And this indicates we could move to a period where we are going to have lower interest rates in the United States. So what happens? Uncertainty. Uncertainty leads to what? No one is having the upper hand. Uncertainty leads to balance, and there is a balance between buyers and sellers because the market is expecting new information before it decides if it's going to break this range to the upside and continue, or if it will move back lower. So can you see why context and narrative is more important than a simple price level? For example, I am not going to say, oh, by the way, I will sell there because that's where the resistance is. Or I will buy there because this is where the support is. This could work. The resistance could work. The support could work. But please pay attention to what I'm going to say next. It is not working simply because you draw a trend line and in some magic way this is causing the market to turn. Not at all. This resistance is going to work because there are some fundamental information hitting the market. This support, the same, it will work because some new information regarding fundamentals will hit the market, so this level acts as support. This is the reason. So use the points as references, as areas to help you manage your risk, to help you manage profit targets, and so on. What you don't do at any circumstances is just go ahead and say, okay, we are there, I sell, and I place a stop above. This is a recipe for disaster, and you will be in a situation where you pull the trades, you pull the trigger, you think you are doing everything according to process, and many times your stop will get hit, and then it could move in the way you had originally assumed. And this is the worst thing that can happen because it affects you at a psychological level. So what can you do? Use the levels as a reference to manage risk and determine profit targets as well. What you don't do is making decisions about taking a trade simply because it approached a certain level. You need to understand the difference because this is one of the fastest ways to start thinking like a professional. And please consider what happens in prop firms. The prop firms, they do want you to overtrade. They do want you to sometimes lose money because this is how their model works. However, if you wish to succeed and start trading like a professional trader, you need to identify your edge, and this is exactly what we are helping here at TTT Markets our traders to achieve, so you can start becoming consistently profitable. So this is what you need to keep in mind, and remember to pay attention to two things, and I will say them again: structure and narrative. Thank you for watching. I hope I see you in the next video here at TTT Markets.